Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, hey, going? Phil Tarrant, co-host, or host, depends what I'm doing. The Smart Property Investment Show. Hope you're well as we kick into gear for December and as the world sort of gets set for Christmas in a lot of parts of the world. The madness of the silly season is certainly upon us. There's parties going all over the joint. My biggest issue at the moment is saying no to stuff. Not podcasting, obviously, but all the social functions that are out there. So I'm pretty particular about what I go to and what I choose to attend. It's always a good time to sort of reflect and connect with people who you've worked with over the year and get stuff done. There's quite a lot of property parties on at the moment. One of them wasn't invited to, thankfully, because it made the papers for all the right reasons, maybe. I want to know more about it, so I've asked Sam Gordon in the studio, Director of Australian Property Scout, who held a boat party on Sydney Harbour with a whole bunch of property investors after what he was a very successful couple of days.
Yeah, thank you, mate. Yeah.
Picked up by the Daily Mail, mate.
Yeah.
For some reason, a lot of people don't like property investors. It would appear for some of the commentary coming out of it.
Mate, there was...
Give me the colour.
Yeah,
give
mate,
me the
it's good
story.
to be back, Phil, mate. Thanks for having me back.
Yeah.
It's, man, so we had our APS, the Australian Property Scout Christmas party on Sydney Harbour. We had everyone together, right? We had the School of Property boot camp on the Saturday. It was about 400 odd people. And then on the Sunday, we had the Australian Property Scout Summit with over 700 people in the room. And man, I flew the whole team in. Like we were all there for the weekend and everything. So we had the Australian Property Scout Christmas party on the Monday. And yeah, we had most people listening may have seen this. If you know property, you would have been targeted by the everyone's bloody posts around this thing. It was Daily Mail, news.com.au, everyone, mate. It was actually pretty much all the different sort of news providers, Yahoo and all the rest of it. And yeah, man, one of the girls went around filming on the boat, just asking everyone how many properties do you have. And yeah, that just went crazy. They picked it up and it went crazy. And there was all these people. There was actually a lot of people giving a lot of love, and there was a lot of people giving a lot of hate on it as well. So it was, yeah, man, it was funny to kind of watch it play out. But mate, at the end of the day, we're all property investors on that boat. I think when you engage a team to help you buy property, you want people that buy property and then invest in it and live and breathe it, right? So, mate, as much as we got a lot of stick for it, it is what it is.
Well, you wouldn't want to be on the boat of misery and dismal failures, right? Like, we all want to be property investors. You actually want to. If you're investing your time, energy, and effort, a lot of people, it sounds like, gave up their weekend to invest in their own education at your was it the School of Property?
School of Property boot camp. That was closed doors just for School of Property students. That was on a Saturday, and then the Sunday was APS Summit, which actually was open to everyone, open to the public as well. But yeah, obviously had a lot of clients.
So is everyone there investing in their own education, trying to get ahead in property? So
yeah,
it's probably okay for people to talk about property on a boat together.
100%. Well, it was the whole APS team as well, right? So it was our team that was on the yacht. That was the Christmas party. So yeah, man, 100%. Like we're all, and I'm proud of all those people. There's so many good kids there in their 20s, man. They got like 4 or 5 plus.
What do you reckon the age? Like, what's the average age of that people on the boat? The sort of medium, would it be late 20s? Do you reckon?
Yeah, you probably.
Early 30s?
Yeah, majority is probably like 25 to 35.
Yeah, okay.
And then we've probably still got a decent amount in 40s and 50s as well. It depends on the role. Different roles, different sort of skill sets, I guess, and different different hires in the business as well.
So what was the negative commentary coming from people in the social posts? Is like, you guys are all that's wrong about property in Australia, owning all these properties, stopping us other people to buy.
I was like, this is what's wrong with Sydney. This is why Sydney. This is what's wrong with Sydney or something like that. And I'm like, mate, barely any of our properties are in Sydney. For one, one of the others was, you make it so easy to hate you. To which I replied, the feeling's mutual. Yeah, okay. Again, replied before I realised it was going to get picked up, and to be honest, I would have changed.
Did that go back on? They keep writing stories off the back of that.
That was a headline on one of them, I think. So, yeah, no, it was, mate, all you can do is laugh, right? Like at the end of the day, man, anyone, especially in Australia, tall poppy is a big thing, right? Tall poppy syndrome. And I think realistically, if you do well in Australia and there's any sort of news coverage or anything, you're going to get hammered. There's plenty of people going to try and pull you down.
Sort of view that, particularly in America where, everyone talks about entrepreneurialism in Australia, but really there's a whole bunch of people who really don't want you to get ahead, or if you do get ahead, they'll have a crack. Yeah. Tall poppy syndrome, which is for sure pretty unique to Australia. In America, like, people's failures are celebrated and their successes are also celebrated, right? Like it's a very different mindset. In America, if you're doing what you do in America, everyone go, man, you're cool, dude. Be belly bumping and fist pumping. but really, like people would actually be happy for you. Whereas in Australia, for some reason, you cop on the other side. You can't really show success.
Yeah, man. Dude, I had it when I think when I hit 30, I was 31 properties by 31 or something. Someone hit me up. I think we might have done a potty on it, and then I think it was a Daily Telegraph picked it up, and mate, I got hammered. Like, the dude called me out of the blue, wanted to have a chat about it. We had a chat, explained, just kind of broke the story down, and mate, like especially when I started this journey, like literally minimum wage, showing what is possible for pretty much anyone out there, and man, I absolutely decimated by all the trolls on that one, but I'm pretty immune to it now, mate.
You do, but you've got to stay the course and focus on what the outcomes are. And it's something I really wanted to chat to you about today, because a lot of people can get sort of thrown off course through a whole bunch of different things that get in the way. Like, you can't let the haters hate. You just got to play your cards and get on with it and block out what is a lot of negative noise. And, that's not encouraging voices. They're detracting voices, and you're better off just ignoring them. I don't really get trolled too much. I might do, but the thing is that I might do. I just don't
even know.
I don't even know, and I don't care. Like seriously, I just don't care. The people who I surround myself around, and connected and dialed in with, they're the people I care about. Not people sort of social media warriors who tell you otherwise. Say just go, whatever. Yeah.
100%.
But I think one of the criticisms I only saw it briefly was, essentially people like you and your clients are stopping Australians buying property, young Australians buying properties. And we're recording this literally after, was it Help Me Buy legislation was passed through? So they're structurally trying to put all these things in to help young Australians buy property. But you're still a youngish Australian, you're not an old Australian. But,
thanks, man.
But you have a lot of clients in their 20s who
heaps
are buying investment properties. So they're not complaining about all the reasons why they can't invest. They're going about investing.
For sure. I mean, I think it's a mindset thing, right? And like so many people listening to this have got the right mindset for it. But I think like even so many of our clients I see come through and like, I've spoken to people, especially in the past, and like, I don't know what to do. I don't have enough savings or whatever. And like sometimes it's like looking at what you've bought of what you thought was a priority before. And we have so many clients actually in their 20s that have like realized I've done investor stories on podcasts before about people who sold the primary residence and then rent vested, and it opened up all this borrowing capacity. They sold the $50,000 ute, and it gave them their $50,000 deposit, and they started the journey. And in 12 months, they got themselves 3 properties. Like these sorts of stories are so tangible and real, but you've got to be willing to do, realistically, you can't expect the results of the 1% if you're not going to do the same work. You can't do the work of the 99 and then expect the 1. You've got to do what 99% of people won't do to achieve the top 1%. So often sacrifice comes into it, especially for the younger generation as well, who might not make as much, and it might be harder to get their foot in the door for that first property. But are you also willing to not party for a year, or not travel for a couple of years to save that first deposit, not have to look flashy in a car you probably can't afford? All these sorts of things, they all revolve into that sacrifice piece, which everyone has to do to get into their first property. It's a simple part of life.
Well said, and none of this is a secret, right?
Of course.
It's investing in property now is largely democratized. There's so much information out there. Some are good, some are not so good.
Yeah.
So be careful where you get your info from. But it's not a secret anymore how to do this.
Yeah.
But what comes down to is the grit and the hard work around it, and the prioritisation and inverted commas, the sacrifice. You're not sacrificing. I'm not going out drinking beers. It's a big sacrifice of my life. It doesn't matter. You got to give up some things to get other things, right? And to your point around a $50,000 ute, that same $50,000 can be deployed into an asset, which is not only going to be hopefully a wealth creation asset, but also something which you can leverage for the purpose of better taxable outcomes. Now, just drive an old banger. You don't see old cars on the road anymore.
You don't, eh? I remember that a couple of years ago.
I try and find them.
A light bulb. I was like, there's no old cars anymore.
Even like P-platers don't drive like cars which are falling apart.
Yeah.
I just don't get it anymore. Like they're all driving new hatchbacks or guys are driving like four-wheel drives and stuff, right? Like there's just no old cars on the road anymore.
Yeah,
so people's priorities are changing, and they're looking towards the government, I think, for support with this Help Me Buy scheme, which is, the Australian. Now let's be clear. This is the Australian taxpayer being equity partners for Australian real estate owners.
Yeah.
That's
100%.
crazy.
Yeah, man. And it's huge as well. Like what they're putting up as collateral, from a deposit side.
It's actually like 40%, right?
Yeah, it's massive.
It's a huge amount of money. Now, that means the government are property investors.
Yeah. They're taking that equity stake.
So here's a hot tip. The government is probably going to want to make sure that properties don't go down in value.
Yeah.
So I've always said you've got two major, and I want your view, two major stakeholders why investing in property is a good thing, right? And part of it's leverage, right? You've got the Australian Tax Office, right? People are incentivised as property investors through tax breaks and other applications of that.
Yeah.
So the ATO is dialed in and the banks are dialed in.
Yeah.
The banks lend the money.
Yeah. The banks are the biggest business in Australia, right?
Yeah, the biggest business in Australia. And so both those people are highly invested in ensuring that property is good. Now you got the Australian government going, here's some equity as well. You're co-investing with the Australian government.
That's crazy, eh? It's
if you ever want
crazy.
any clues about why the Australian property market is the way it is, there's a red hot reason.
Yeah. Mate, you look at even like when you look at how many industries are tied to the real estate industry. You know what I mean? Like so many things from a manufacturing piece, property management, everything that flows in and around property. It's the largest employer in Australia as an industry with all the flow on industries that come off it as well. Man, it's an absolute no-brainer. The government will do everything they can to keep stimulus there, to keep everything ticking over, turning over, building products, leasing, all the rest of it, everything that comes through from it, even from renovations, rebuilds, all that sort of stuff. They have such a vested interest because it's so much money that keeps getting pumped in the economy, but also, and then so much, you got GST on your new builds and all the rest of it, GST on everything, right? And then all your taxpayers that are involved in it, but just the amount of people that are employed by it, and as much stimulus and economic benefit that comes off the back of it, mate, they have the most ridiculous vested interest in this thing, and now they're doubling down on it, right? With the equity piece.
We are largely a property economy, and you remember back when they were trying to stimulate building activity, so they said, "Oh, we'll give everyone I think it was like a check for renovating or something or other." Remember that?
Really?
Yeah, don't remember this.
I remember the Builder Boost one. I don't remember
that one.
Was it the same one?
Yeah, that thing.
It was too.
Yeah,
It was for
where you do a
renos
reno
too.
for like 80, 90 grand or something for a reno. You just go, there you go, do a reno. You know, it was come invest it. So what does all that mean for property markets? It's a safe bet, maybe? I don't know.
I think so.
I know you're the expert.
Well, you look at the banks and like how diligent they are, strict they are with lending people to money as well. They have a very vested interest in making sure that the right people are taking out loans, but that they are still lending money as well. So yeah, man, like it drives Australia. It has been for so long. Like you look really since I've been doing this, which is I bought the first one in 2009, but I look at it from like 2013 to now, other than a little bit of a dip and a little bit of a lull in like 2018, 2019, and especially when COVID hit, I was like, okay, well, what's the thing that we can keep people employed in that they're not going to be in super close contact with? It's the construction industry. Yeah. So almost every other operation in Australia shuts down, but the construction industry keeps kicking. Yeah, it's crazy, man, crazy. That and Bottle-O's.
And Bottle-O's. Bottle-O's did well out of that from what I said. So there's lots we want to talk about, Sam, and we're sort of chatting before we come on air, and we're going to sort of shape some really good discussions next year, and I really want to sort of pin down on market predictions and all that sort of stuff. But I think I'll probably leave that today. There's a couple of things I want to run through with you. Some are a bit tactical because we're getting a lot of questions around it, but then also pick up on something that you've been chatting about a lot recently, which I've sort of got some question marks around, is this idea of creating a positive cash flow portfolio that's going to put 150K into your pocket every year. I want to break that apart.
Yeah, sweet.
Just so we can help explain how all that works. Welcome back, Phil Tarrant, host of the Smart Property Investment Show with Sam Gordon from Australian Property Scout. Hey, I saw you guys are finalists for the REB Awards.
Yeah, mate, we've got a few in there.
I know. What's going on?
Mate, it's all guns blazing. Buyers Agency of the Year, NOM again. So I think that's third or fourth year in a row in the NOM. From the finalist, I won BA of the Year this year.
You did?
Yeah, in Feb. So, mate, fingers crossed for the double takedown on that one. We've got a young fella in our team as well, Paulie Dem. He's up for Rising Star and Young Gun. Okay. He's had a massive year. He's been killing it. Yeah. And then I'm up for Mentor of the Year as well. So the old fiver, mate. We're up for 5-1. So interesting, mate. Interesting to see how we go.
How upset are you going to be when you don't get any?
Oh, mate, surely we're going to have to have a shoe-in for something.
It's a pretty good... I had a quick flick through the final. So this is the REB Awards. This is the independent national awards program for real estate. So there's a lot of real estate awards, and some of them are like real estate institute in New South Wales,
Yeah.
real estate institute in Australia, or each real estate agency or franchisor have their own awards, and they're just people comparing themselves with each other. This is like the only universal awards program where, irrespective of who you are or where your allegiance lie or what colour logo you have on your door or whether or not you're a member of a member association or independent, this is where everyone comes together. So it's a real deal. It's pretty competitive, the buyers agency space, and good operators in there. Which is good for the industry,
names.
to be fair.
100%, man.
It's really,
100%.
really good for the industry.
Mate, if it was no good operators, like it's very hard to like continually, or not very hard, but I think like it would be less of a push to try and continually better yourself. When you know there's other good people in the industry, man, you want to keep improving, keep optimizing, keep bringing cool shit to the table that's going to keep pushing the industry forward in the right way. If you were purely, yourself on top and there was no one else chasing you down or no one else in front of you to chase, it's very, I think it would be harder to go down from that end. So that's why I like the competition that's there, because it drives you, man. It makes you want to implement, improve, bring things to the table as well. So like even looking at school of property, that was one of the biggest reasons. There's a lot of reasons why I wanted to bring that to the table, but point of difference, even with my own journey and being able to pass that on to people.
And that's
as well.
the education, mentorship stuff. That's really important here, right?
Yeah, 100%, man. Yeah, I think it's huge.
Why?
Because there's three pieces to a journey. Like I always thought it was two, right? It's buying property and financing. And so often, like if you really understand how to do those two things, you'll do really well. But like the strategy piece is the piece that so many people don't understand. And man, I see so many people out there like just talking shit that just don't understand it. And man, it grinds my gears in a big way. And I'm not someone to like openly call people out. Like I just don't. I have no interest in having online keyboard warrior debates with people and all the rest of the sort of thing. It just annoys me, right? The thing that I think is the biggest missing piece in that, so the third leg of effectively the tripod of building this thing, is the education piece. But education from someone that's done it, you know what I mean, and really built it and gone through it all, and not only building clients' portfolios, but like I look at myself and what I help clients with. I was effectively like the trailblazer of education of learning, and I learned all the stuff and I made all the mistakes and all the rest of it, and that's what I'm able to pass on to my clients. And man, I think like all those learnings over all that time, it culminated into like this huge vault of information in my head that I kind of got to a point where I couldn't give it to everyone. And so the idea really behind it was I still want to educate as many people as I can. Like, all right, man, I want to, like, we have a goal in the business of retiring 500 people by 2024. By 2030. We would miss that goal if we're going for that, right? But 500 investors by 2030. Man, I realized that like I needed to bring something like this to the table so I could impact more people, because I can't work with 500 people at once, right? It's not going to happen. So I needed to bring something like this to the table that would really allow me to level people's educations up and really just understand how to actually do this thing, because it's not rocket science, but at the same time, there's a lot of intricacies out there that people just don't know and they don't understand. So bringing this to the table, man, it was my way really of creating something that would give people the learnings and the understandings on how to build a portfolio and get to these passive income targets that people are chasing. Because man, you can shoot from the hip and you could be great at buying property, but if you don't understand the strategy or the financing piece, you might get a couple of deals in and get stuck. Or you might understand the financing piece, but be an average operator in terms of buying, and you get stuck with that. When you understand, and this is when you get the three, it looks like a trifecta, right? You get the three things right, and the education piece, knowing how to build it, knowing how to create it, and keep pushing it forward. And even alternative ways of doing things. And I've been very vocal about this before. Like even the idea of sell downs and stuff, and people being like, "No, you hold forever," and I'm like, "You don't hold forever. Like that's a novice approach. Is holding forever. Anyone that's held forever, show me someone that's retired from that. You can't retire from it, right? Unless you're making a huge income and you have 20 to 30 years up your sleeve." You probably can then. But like how much wasted time? You can bring that forward 10 years by understanding when to sell. Yeah. And like this is one tiny component of it, but effectively it breaks down all the learnings around this and just the actual practical application of what that looks like when you do things like that. Yeah. And that's one piece out of, there's 100 lessons in there now, right? This is just one piece of, the greater thing that it is. And mate, this thing is literally how people can retire from property.
Yeah. Well, I guess you're talking about retiring with 500 people by 2030. And I want to talk to you about this sort of 150K passive income, because I imagine that's probably how that's all framed. And you've given us one of those lessons, which is probably around learn to be a property transactor rather than a holder, right? Like that's pretty important.
Treat it like a business.
Treat it like a business.
Yeah.
I buy and sell properties. It's cool. A lot of
100%.
people don't do it, but and the point around education though, education is only as good as how well you act or deploy the education you have. I would argue I'm probably one of the most educated people in property in Australia, because I must have had thousands
of conversations.
I've done thousands
100%.
of conversations around property, so I know a lot, but do I actually enact my learnings as well as I could do? No, I don't. And I'm conscious of that, but I'm all right with that, because that would be a full-time job, but I actually have another full-time job I've got to worry about. So for me, property's a little side thing, right?
Yeah.
Which I probably should prioritise a little bit more, and I'll get around to eventually, but it doesn't really matter. I'm okay.
I think it always depends on the individual. So exactly as you're saying there, like your core business is what you do, right? Like that's where you make the bulk of what you do. And it's a really profitable side hustle with the property. But for most people, and like myself, when I was especially in my 20s, like property, man, I was making $500,000 a year in growth, and the portfolio was positive, and I'm making 70, 80 grand a year as an income. Like that for me was the priority.
It's very different, isn't it?
Yeah, man. I think like you got to understand where you're at, and unless you're making a big income, or even when you're building a career unless you're going to get to like a significant income side of things, and business owners obviously have that ability like yourself. But if you don't, like, even if you do, this is the avenue you should be building out, so you're not always reliant on a job, or working for that.
Just give us a sense for that. What's the sort of the biggest incomes you see in your client base and the smallest incomes you see in your client base? Like I'm just trying to get a perspective of what's normal.
Normal for me is probably 80 to 150K.
That's normal.
That's normal. So average to probably slightly above average is our core client base.
Yeah.
We have people definitely that make less than that, right? Like 50s, 60s. There's obviously, it's a bit harder these days in this environment. Go back, rewind like 3-4 years. I would have had a lot of people that would have made less than the average Australian income. Yeah. These days it takes longer to sort of get there. And by the time they've kind of saved that deposit, their incomes a lot of the time have gone up as well.
So to that point, I think this idea of like, I become a property investor on a very low income. I struggle with that today. It's very, very tough. There's got to be
it would just take time.
It's got to take time.
Yeah, and that's what people have to be understanding of that. Like, it's going to take time, but if you know how to do it, you buy the right property, right location, right price, and then you structure it properly, then you can, equity release and preserve borrowing capacity and all the rest of the thing. You can still do it. The hardest part's getting to that first one.
Yeah.
But that's where the bulk is, man. And then I work with heaps of people that probably sit between 2 to 500K.
Yeah.
The bulk would be 80 to that 150. Heaps that would be 2 to 500. And then, man, I got anaesthetists and surgeons on the book and business owners, and so anaesthetists, surgeons, they might be 700 to $1 million.
Yeah.
And then I got business owners that range between 1 to 10 mil incomes as well. So there's a huge spread there, but the bulk would be 80 to 150, 200 sort of thing, especially when they're combined. But that's talking individual, and then some people are singles and some people work as couples.
So there's not that many people with $1 million salaries out there investing in property that you see.
I don't see that many of them. They're not probably predominantly my client base.
Yeah, maybe. But there really isn't that many out there.
Yeah,
to be honest with you,
it's a
right?
tiny
Like
percentage
it's
of
a tiny
income.
percentage of income. So I just want to give a sense for our listeners what sort of inverted commas. Where do you sit within the cohort? Where's the bell curve, and where do you sit inside that bell curve? So, probably can be accessible. To the point, like, I earn $50,000 a year as a part-time worker, and I've built this massive property portfolio. I don't know. It's a bit sort of, you just can't get the finance, right? It's a bit, and you still see some of those stories floating around. Scratch the surface. Normally they've got a big family pledge in there, or they're not doing it completely, but that's okay. There's other ways around it, right? Like,
and if that's what you got to do to get,
that's what you got to do. That's what you got to do, right? And this goes back to being focused and being strategic about it. But one of the and I think you've handed out like 28 new lessons over the course of this year, is it, the School of Property? And I was sort of picking through them. One of them is about income boosting. And at a tactical level, this is something which can really move you through that bell curve to give you greater capacity to keep buying property.
100%.
And you drill down that quite a lot inside the School of Property, right? So this is what you get with that.
Like one of the biggest things with there was a twofold reason for the income boosting modules coming in. The first one was my accountant said to me I needed to bring that in to be able to hit 50% claimable for an investor. So like he said I need to boost the income producing sort of stuff. So that was one of the reasons. And then, man, when I started sort of fleshing it out and seeing what I could really bring into it, it made a lot of sense to actually bring that piece in as well. So, man, there's different lessons within that module on renovations, builds, looking at your existing portfolio. What can you trim out? This is the thing. Most people don't assess their portfolio like diligently and consistently. So it's like, and in reality, especially in a portfolio, dollar saved is dollar made. So much of that sort of stuff of like assessing, what you've got internally within the portfolio, where could you save some dollars, and then also what could you apply to the current portfolio to increase the income with it across so many things, and even looking forward as to what you're buying next. What could you be doing, or should this be a play that you should be looking for? How do we add some cash flow into the portfolio, especially with where interest rates are right now? I don't know your exact take on it, but the idea that like rates are going to come back next year, but it's going to depend on how much, how soon. Like, is it going to happen, and how much, how soon? From that result as well. So there might be a lot of people that are sitting there on a portfolio that's costing them a fair amount, thinking, well, the first rate cut's going to come in Feb or March or whatever, when in reality, we don't know when it's going to come and how much it's going to come as well. So if you're going to apply this sort of stuff to your portfolio and start to shave $1,000, $2,000 off a property, or maybe add another $1,000, $2,000 on each deal as well, what does that look like as a shift within your portfolio too?
And this is the point around, these are things you can control, right?
Yes.
Interest rates are nothing that you can control. I think it was formalised today that they're actually going down this 2-board pathway from March of next year. I think I saw some news around
that.
They
come out today?
Come out today.
Okay, yeah,
to separate the two things. But I'm not making any property investment related decisions assuming there's a
rate cut.
A rate cut.
Yeah.
You know what? We might get to this time next year and everyone's going, why wasn't there a rate cut this year? There's a good chance that may happen.
Yeah. Well, there's so many factors outside of our control, and really outside the government's control and the RBA's control in terms of where this thing kind of gets to as well. Yeah. They need inflation to get to a certain band. They're not doing this thing prematurely.
Well, Christmas ain't going to help things for the inflationary numbers, and underlying inflation is the issue, right? And there's still a lot of stimulus going in there with like power bills and all this sort of stuff. Did you actually get any money off power bills?
I don't think so.
Like I was sitting there going, like, if you're a property investor and you got 10. Say you got 10 things.
Yeah.
Like, I don't know.
I don't know. Maybe you're assigned to a tenant somewhere.
Maybe. Let's hope so. But don't be making any decisions. Don't make a decision today going, I can hold for a little while until rates come down.
Yeah.
I'd probably counsel about not doing that.
Everyone should be constantly assessing their portfolios anyway. You've got to be treating your portfolio like a business and really like literally assessing everything in your portfolio consistently, because that's you got to be a professional with this thing. And it's even like, as Phil said before, around like it being a side hustle. Like a side hustle is one thing, but you still got to nurture that side hustle. You know what I mean? Like
you can't set and forget. You actually got to you got to nurture it. You got to. Yeah, it's otherwise it just goes off the rail. And that sort of comes back to the point around why people invest in property. One of your points is and I've seen you sort of quite vocal around it, is about manufacturing. It's essentially income replacement, right? You want to make 500 people retire by 2030, which is 6 years away, right? And you're assuming it's sort of 150K in income. Welcome back, Phil Tarrant, Smart Property Investment with Sam Gordon, Australian Property Scout, Director, Founder.
Cheers, buddy.
CEO.
That's it. Everything.
Is there any job that you don't do anymore?
Yes, heaps I've given away now.
Yeah?
So it's good, yeah.
Okay.
Needed to, mate. Needed to.
Yeah, you got to do
Not enough hours in the day.
I know. It gets tight. What's on for you over the break, mate? Are you going to... Do you sort of think about property when you're sort of on holidays, or you try not to think about property?
I'm always thinking about it, man. I live and breathe it. Hey, like it's. I think it's just so core to me, and it has been for so many years now. It was like I was saying when I was back making bugger all on the farm. This was what I knew was making me money, and this is what I knew was going to make me money. So my mind has always been on it. When I go away, it's actually funny because like you think I'd switch off about it, but I just think about different things. So I kind of think about different strategies, or like this thing on a property or that thing or whatever. And I just like so many different sort of ideas actually come to me when I'm off on a break. So that's actually why I like to head off. I normally run until I'm pretty much burnt out, and then
we spoke about this before. Then you need time away, right?
Yeah. So I can normally do about 13 to 14 weeks straight, which might sound funny to people, to being able to do like 3 months and then go on holiday. But it's normally 13 to 14 weeks is typically my sweet spot of when I burn out, because I run pretty hard during that window. And then when I'm burning out, I can feel it coming. I normally.
What do you mean you feel it coming? What do you feel coming? You just sort of you get a bit of malaise, or Bit of fatigue with it all?
Yeah, I get a bit fatigued. I get over it. Start getting a bit
You
snappy.
get pissed off.
Get over it.
Yeah, okay.
I'm just like, I get
Frustrated with people.
ready. Start to get ready to not throw in the towel, but I can just feel it coming. And I get over it. And then, yeah, man, it's just like, I just need that. I know I need that reset. It's something I picked up probably 2-3 years ago where I sort of, and I used to try and push through it, but then your work quality dips and the temper's flaring all the time. And it's just, man, I think it's just learning to know yourself. And,
No, it's important. You've got to be dialed into yourself and know how you sort of work, because only then you can be, productive all the time. It's that's cool.
Thankfully, with the team now, and again, hence why I need to replace myself with a few different roles. When I can head off now, I just put the phone on divert to my assistant, and it's cool because I might go for say a week, 2 weeks or whatever, and even though everything else is being taken care of in the background, I'm obviously available if there's anything urgent. But yeah, man, it's cool because when I'm away, the mind starts to relax again, but then all these ideas start to come through.
You come back, everyone goes, "Oh, he's back again. There's more ideas. What's going to be next?"
Man, always end of last year or mid last year, it was School of Property. I came back from I can't remember where I came back from last year, and then I came back. I did a little boarding trip in the middle of the year. I went off and had a bit of snowboarding, and I came back and I was like, I'm doing School of Property. I solidified it in my mind. I came back and I smashed it out in. I think it was 3 or 4 months straight of doing everything else and then recording this at the same time as well. And then this year it was commercial, so we launched commercial into this year.
I was going to ask her because So are you still buying property personally?
Personally?
Yeah,
of course.
Well, what sort of stuff? Commercial?
Yeah, it's a mix, right? But I still love my resi, and resi is powerful when you know how to play the resi game. Resi is super powerful. So man, I'm still buying a lot of resi as well. I typically buy renovation stuff, so I buy a lot of big renos that I don't really want to give to clients. Because I know I'll make a nice margin on it, but it's there's some hairy stuff in there that I bought.
Are you buying with finance, or are you sort of cash buying, or?
It's a bit of a mix. If something's proper stuffed and I can't get finance for it, I'll buy it with cash, renovate it, refinance it back out. I'm on constant a refi chain. But then I've bought a lot of commercial. This probably the last 18 to 24 months. So it was about 18 months ago I saw a real change coming with the yield compression. I knew this year was going to be massive. I did the potty last year called the Super Boom. We did a session on it, and then I did it on Scouting Australia as well. And I ran through, and when I literally ran through it and actually ran through all the numbers, I'm like, the market's going to go crazy in the next 12 to 18 months, right? And when I sort of realized that as well, I realized that yield compression was just going to be too strong, that we weren't going to be able to do our manufactured cash flow deals. So I'm like, we've got to bring in this arm in residential. So I'm like, we've got to bring in, I have to build out this arm because it's coming. And it is a very big requirement of how I get 500 people retired by 2030 is going to be, obviously the cash flow piece is super important, because you don't buy 10 growth properties and then sell 5 to own 5 because their net yields are terrible, right? And if you did 5 to pay out 5 high cash flow resis or commercials or whatever they are, that's where you're actually going to get the return. You need the high net return, not just a blue chip returning 2%. There's no point. You know what I mean? It doesn't make sense at all. So that's the sort of strategy piece with it. And I knew we needed to do the transition. So we've been working on the background for a very, very long time. Soft launched it internally at the start of this year, and then we've just brought it out to the public.
So what's it called?
It's Australian Property Scout Commercial.
It's just
APS Commercial.
Okay.
Yeah,
cool. Because you use the number of 150K, and it's just, for some reason, it seems to be the number that everyone talks about as a retirement.
It's the old 100K.
Income replacement, right?
It used to be the old 100K.
Yeah, and I hear it, and I own a lot of resi property, and I know a lot of resi property investors to actually have 150K of positively contributing 150K into your bank account every single year, fully costed resi property.
100%.
It's a massive portfolio, right?
No, it's not.
Let's talk about it. Okay. How big is a resi portfolio? And you're not going to do it in 5 years?
5 years would definitely be a stretch. You're not doing it in 5 years. From a standing start, definitely not in 5 years.
So how long does it take?
Realistically, depends how hard you go.
No commercial.
Depends how hard you go.
Yeah.
So if you, even from a standing start right now, as long as incomes were okay, we're pretty good, you can easily get someone there in 10 years.
Yeah.
100%. 8 to 10 years, depending how hard you're willing to buy at the start. It's not that hard. What do you need? Okay, so I'll break you down what you need. It's not hard, right?
Yeah.
You need 4 residential cash flow deals. Let's say each deal is producing 35, and this is where you got to treat a portfolio like a business field. You got to do my game plan, right?
Yeah.
You need 4 properties owned outright, residential cash flow deals that are producing between $35,000 to $40,000 a year.
No
net
debt.
passive. Yeah, net passive if they were debt free.
Yeah.
Right. 4 of those. 2 at 35 each is 70. 2 at 40 each is 80.
Yeah.
There's your 150. Right. Now, what you need to do is you need to pair them up with a certain amount of growth properties to go through the pay down. Typically on 150K, it literally is a 10 property portfolio. 6 growth properties paired with 4 high cash flow deals. You carry these 6 growth properties through a growth cycle. You sell them off. You use the profits. You pay down the debt on the cash flow deals. There's your 4 deals paid out. It's not rocket science. People think it's crazy. It's rocket. No, you just got to do what 99% of people won't do, which is sell properties at the right time.
Yeah.
You got to do the right cash flow deals. Yeah, if you just went out and just did exactly as you say there, if you're just going to build them and hold all the debt, it's going to take you 20 years. Instead of you probably wouldn't ever get there because servicing would be too hard. You wouldn't get there from a servicing perspective.
And it's it. Most people can't service the debt.
You need the cash flow deals, right? And you need a mix, and you need to sell when the time's right.
Yeah.
So it's all these different things. It's this training video that I like. A lot of people listening to this who obviously are into property, you probably have seen it pop up. Literally training video, and it's an hour and 10-minute video where I break down exactly how I would do it. I don't show the financing piece in terms of how I would finance it because that is how that's school of property, right? Like that whole piece in there. That comes down to school of property. But I break down exactly how you do it, even in terms of like properties I would acquire, what sort of timeframes, all the rest of it. It's not crazy. And then in today's market, like how would I do it now? All right, I would probably pivot a bit, and a certain amount of those deals would be those cash flow deals would be commercial. I definitely would have a split with that now of commercial. Once you go over 150. As well, this is where you're probably almost purely turning to commercial, especially it's right now, right? So the way that I look at residential cash flow deals right now is it's kind of like the star player who's got injured. You know what I mean? Let's just say like, or a great player in a starting 11 who's being injured, using football terms, who's been injured and he's on the bench now because he's not, or he's in the stands because he's just chilling for now because he's not producing, right? But when he gets injured, his time's going to be there to come back. But it's just not right now. The yields aren't good enough. It's at the wrong point in the market, and that's where commercial effectively is like read its head as 100% the better option to be getting into from a cash flow perspective. The only caveat is if you're really tight on capital and you need to get in at 88, 90% LVR, then yes, still going down that residential cash flow route. If you can, it's very limited deals that would stack and make sense, but it can be like that would be the option. But if you got the deposits for 20% plus, commercial makes so much more sense now on that front.
Yeah, and there's a lot to unpack there, and if you're doing it in the resi, to actually have the discipline, to be satisfied with 4 unencumbered properties. Most property investors I know, when they start, they don't stop, right? So they always carry more debt, with an idea that they can liquidate to achieve that, right? That's an optionality. There might be an optionality to be retired on 150K.
Yeah. But most people keep going.
But most people can keep going. So this is the number that's always you've actually got to stop and sell down all those properties to pay off the debt, the other ones to actually be unencumbered. Often doesn't happen. It often doesn't happen.
And this is where it's an individual's prerogative of what they want to do. What's their priority?
Yeah.
Like if 150K is the goal, do 2 deals a year for 5 years. You got a 10 property portfolio. Carry that within 5 years. You like 6
and ensure you get capital growth.
Yeah, of course. Yeah, I mean, but let's say everything playing out the way that we're anticipating it does. But even with that, even if all you did was buy 2 properties a year for the next 5 years, in that ratio we're talking about. And in 10 years, in 10 years, your growth properties should have bloody doubled if you bought in the right locations or had significant growth. And then you're offsetting and you're selling those things down to debt reduce. Like that's where you're in like a 7, 8, 10 year time frame if you're selling down intelligently as well from a tax savings perspective to tax mitigation perspective. This is 100% possible. So it's just like thinking slightly outside the norm of what everyone thinks is how you should invest. It's like, well, no, if this is the avenue you go down, you follow. This is how you get that result. But you're exactly right.
But you need to choose that being the goal.
Yeah.
And you can't really deviate from. You're on rails in many ways in terms of delivering. I'm not arguing that it can't be done.
Yeah.
But there's a lot of what ifs in there, right? Assuming you're buying the right properties at the right time, you're selling at the right price. Yeah. You're doing maybe some reno works at the right time, at the right price for the right reason. And then you sell at the right time for the right price, the right reason. And there's a lot you can't really control. When you might go, it's time to sell in 3 or 4 years. selling in a, say, subdued market in Brisbane and Sydney right now. Like, would you want to be selling in these markets right now? Don't know. There's a lot of what ifs, but the point is, if you're going to go in this pathway, you got to be really, really strategic. You got to be really goal orientated, and you need to make sure you're making the right decisions. And a lot of property investors to do that in isolation is very tough. No doubt. That's why you'll tell me you need this school of property and stuff, because it's going to help you with this sort of thing. But it's tough, right? It's really, really tough. And do you think this yield compression we're in right now with resi property will remain for a period of time?
I think it will remain for a period. One quick thing on that note as well, though, it all comes down to treating it like a business. Just if you're not emotional about this thing and you build it, if you genuinely build your portfolio like a business, you'll get those results because emotion won't come into it, right? And especially if you make strategic decisions, you have to always be open to like a little variations here when it comes through. But yeah, man, this is where people they talk about being a property investor, but they just don't fully commit to it. If you fully commit to this thing, the other huge piece of it is 150,000 net passive. Like the bulk of people listening to this are probably making $100,000 to $200,000 a year in income, right? Let's say, I don't know, maybe it's a little bit more or less. I don't know exactly what it is. But let's say the bulk are probably sitting 100 to 200 grand. How hard does every Australian or every person listening to this, how hard do they have to work for an entire year for that 100 to 200 grand? It's also going to take some work, some discipline, some fucking sleepless nights, some effort. But man, how much effort does the average person put in for 48 weeks of the year to make that 100 to 200 grand a year? But you want it until you die. You want it for the next 40 years of your life. And it obviously will increase over time as well, keep in line with inflation or better. But if you want that as a result, there's a lot of blood, sweat and tears that come with it to achieve that result.
You got to want it.
100%.
Yeah.
And this is why so many people get stuck at 1 or 2, because they get knocked mentally or they get knocked by one little occurrence or two. And again, if you want the result of the 1%, you can't get stuck where the 99% get stuck. You have to do what the 1% do to achieve that result. And this is where it's exactly saying this: staying on rails, staying the path, be clear on your goal. Goals can always change, but if you have a clear goal, you can actually chase it. But then if you may, exactly as you say, 150 might not be enough when you might be like, well, you know what, I'm on track. I've built that 10 property portfolio within 5 years that'll give me 150. Why don't I just do a few more hard years of accumulation? Because it gets easier as well. That's where people, they don't realize, you push through a couple of hard years, all of a sudden you realize it's just a game and it gets easier and the equity snowballs and your income, your rental income picks up as well. It gets easier.
But you got to start.
You got to start. You got to stay the course.
The key point is you got to want it.
Yeah.
And this is one of the where I get question marks is that I hear these numbers getting bandied around and structurally, mechanically, I'm not arguing it can't be done. Most people won't because they can't up here. Yeah. They just haven't got the gumption to do it. Yeah. You've got to be hyper focused. Yeah. You've got to be hyper committed. And the reason why I asked you this question is that I wanted you to say it as it is. So saying you've actually, it's hard to do. It can be done, but you've got to be committed to it and you've got to stay the course. Yeah. A lot of people won't, unfortunately.
There's a reason. I don't know the exact number, but there's a reason why it's probably sub 5% of the population retire themselves. I don't know.
Yeah, I don't know the number. I don't know, but
it'd be small.
It'd be tiny. It'd be tiny, right?
It's because most people don't want to do the hard work. No, you know what I mean? Or they let a cycle goes past them and they go, I missed the boat. How many people, like my parents, missed the boat in the 80s and 90s? 30 years have gone on. Like Sydney's gone from 50 grand a house to $1 million or more. You know what I mean? It's like, but they talk themselves out of it because they missed the boat. And I think with the amount of education that there is these days, and just the amount of content and the amount of accessibility to selecting a market or working with someone that'll help you select it and the right property in that location as well, and not pay overs for it, but get it for good money. There's no real excuse to not take that financial future piece into your own hands and create something significant. There really is no excuse for it. Because you can't get to retire, you can't whinge about not having it when you get there. Yeah. It's like if you haven't done the work.
You've got to do the work.
Have to do the work.
You have to do the work. Yeah. Use any sporting analogy, right? You've got to do the work. Use any business analogy. You've got to do the work.
100%.
If you don't want to do the work, you're going to sit on the sidelines.
Yeah. You cannot expect the result.
Yeah. Here we go. Commercial though, I like commercial.
Thank you,
Commercial's
good.
Yeah,
it's good, man. I'm super excited.
I love the idea that someone else pays all the costs connected with your property. You just got to cover the mortgage.
Triple net lease.
But again, one of the issues we have though now is that there is a lot less commercial properties in Australia. Like I can't even remember the number. It's a tiny fraction compared to resi properties, right? And not all of them or many of them are good properties, right? Like, so more investors are now chasing commercial deals, which is getting even more competitive. Yeah. So it's hard to find good deals.
I think the thing to throw in though, because I agree with you completely on it. There's one other side. You don't need as many.
No.
Also, most markets in Australia for resi are owner-occupied markets. So if you wipe out, let's call it 70% of Australia because it's too expensive and there's no yield from it from that perspective anyway. If we're talking 30% of the residential market compared to maybe maybe it's like a 5% or 10% of the size of commercial. I don't know the exact number, same as you. And then even if you drill it down a little bit lower than that, I agree with you. There's a lot less, but there's less competition. I know there is still competition, but there's less competition. You're also going for a very specific play.
Yep.
You know what I mean? Like it's the emotion doesn't come into it. It's purely a yield.
Numbers.
Yeah, it's purely a yield play. So I hear you, man. And again, it wasn't my wheelhouse 2 years ago. I didn't understand it at all. Like 2 years ago, I knew nothing about it because all I knew was what everyone talked about was like, so let's say 6% net yields. Even some, like back then, maybe we're talking 7%, right? But like all these people talking about those, and I'm like, I can beat that in resi. So I'm not going to play with an asset that I don't understand when I know I can beat it in resi, and I'm doing it in markets that I know are going to grow. Yeah. Man, we were doing cash flow deals in Perth, 8.5% yields, getting 6.5% net, and then they doubled in value. Same in Brizzy. Yeah. You know what I mean? It's like
you didn't need to.
Didn't need to.
Yeah.
And then when I saw it coming in, I wasn't like I've seen a lot of people that just bring it out and they go, "Yeah, sweet, here's commercial, and here's some dude that's just going to run it." Or like, oh yeah, we'll still source it for you, but they don't have the understanding. And like, I've worked too hard building the APS residential brand to then just like throw that into the fire of like hopefully doing a few more deals with commercial. And that's why it's taken me so long to build it. I've consumed so much content around it, and I've bought a shitload of deals as well to cut my teeth on all the different things. I always find that the easiest way to learn for me is the actual practical, practical application of it. Because you're like, oh shit, okay, yep, that's why this, or whatever. Yeah, man. And I've actually really enjoyed it because it's purely numbers, and I'm not an emotional investor. So when it comes to purely numbers, you can be so cutthroat with every decision. I love it. It's mad.
Yeah.
So, and the team we've built out is over 100 years combined experience with who we've built out and who we've brought in. It's a very deep team from the sourcing to the due diligence team and everything as well. So it's cool, man. Like I've really enjoyed building it.
That's cool.
I appreciate it.
Congrats.
Thank you. I appreciate
it. It was nice catching up, mate.
Likewise,
It's always good.
It's always good.
Here we are.
We always throw any shit around and have a bit of fun.
That's good, mate. Well, people enjoy our podcasts. Like they're pretty popular.
Always get good feedback on it, man.
Yeah, it's it's good. Good to see where it's all going. But all right, well, we'll work out what we're going to talk about next year.
Yep.
Some market predictions. Can you give me one right now? Biggest tip for 2025?
2025?
Yeah, property.
Oh, there's probably two big ones.
I just want one. But
you want one?
You can give me two.
You just want one?
You give me two.
All right. The biggest one.
Yeah.
My advice has changed so many people's direction this year. Have a look at your primary residence. Work out the numbers of renting the same product compared to if you sold it. And then ask this question of yourself. Is this my dream home? Because if the answer is no, your primary residence is an anchor on your journey, on your investing journey.
Fair enough.
So if you approach 2025 with that, and I did an actual session on this at the summit the other week in Sydney.
How'd that go?
Man, people were texting our brokers in the room, texting them going, I'm selling the primary residence. I'm going to get this. What's this going to do for my serviceability? Man, it absolutely went off because I did all different levels of primary residence and showed the servicing difference. Man, at different price points, we're talking millions of dollars worth of additional borrowing.
What I would say to that, and I'm not providing advice on any of this, but I know a lot of people that do this and it works for them, right?
Yeah.
It can be a huge handbag. Most people want to own their family home because it gives stability and certainty and continuity, right?
Yeah.
And the idea being that you'll pay it off eventually and you can be retired, unencumbered, and that's what your retirement looks like, right? Which is the great Australian dream of maybe a few years ago. Maybe there's different Australian dreams emerging these days.
Yeah.
So that's mainly the main reason people go, I don't want to be thrown out of my principal pleasure residence. Tenancy laws have changed so much over the last couple of years, which puts and gives greater rights to tenants.
Yeah.
So I think there is now an acceptance that there will be tenants for life, and certain people will rent a property for decades, right?
Yeah.
You know, it's okay. So you can get a lot of certainty in leases now.
Yeah.
People do 2-3 year leases.
If you're a good tenant as well, I've never not been offered a release,
Yeah.
and I still rent.
Yeah.
I've got 100+ property portfolio. I still rent.
Yeah.
You know what I mean? It's like because I know the servicing difference. And the other thing as well is like I haven't figured out what primary residence I want yet.
Yeah.
And I think this is the biggest thing is like if you either don't know exactly what it is yet, or you're in your house and you're like, no, this is like, let's say it's $1 million or 700 to $1.5 million or something, but your dream primary residence, like you guys, everyone listening to this is an investor, right?
Yeah.
You don't want the mediocre. You probably want the $3-5 million house. That house that you're living in right now, that's your primary residence, with that primary residence debt on it, is an anchor because the bank doesn't look at it as an asset; it's a liability.
Yeah.
So, what could that open up and change your journey? And
To accelerate growth and move towards it.
Yeah. And multiply that.
Yeah, and just you speak to your mortgage broker about this. From what I understand now, there's some lenders are doing 95% loans with no LMI. In certain postcodes. So a lot of people, so say you've got a $2, $3, $4, $5 million home, whatever it is, you can actually borrow up to 95% against that with no LMI for the purpose of extracting that money for investing in property.
Yeah,
So
the only issue is, I feel.
Yeah.
It's, are you saying if they are already in their dream home?
If you're already in your dream home, if you're already in your dream home, and if you're borrowing against that, that's tax deductible, right?
Yeah.
So you're actually pulling that money out. So maybe you can have your cake and eat it, but if you're in your dream home,
if you're already in it,
and
that's why I put that caveat on it right at the start. If you're in your dream home, then it's a strategic conversation. Exactly, man. That's perfect. If you could do that, it's tax deductible debt, so that makes sense as long as it doesn't kill borrowing by doing it at the same time. But if it doesn't, then 100%, man. But it's like that's the caveat of if you are already in your dream PPR, but then if you're not, like,
just rent.
Yeah, man.
Just rent.
Rent.
What's your other one?
The other one is to don't hold back. 2025. It was the same as I said at the end of last year, heading into this year. Like, man, there's so much money to be made in the property market next year. There's a few big booms coming. Like, even there's a few markets running. If you want to get some quick wins, there's some markets out there still running really well. There's still got good growth left in the tank, really good affordability left in the tank, and there's a few markets getting ready, priming up for their next run.
You're not going to tell me where they are, though, are you?
So just make sure you get yourself positioned in the market, and man, position yourself hard for a big year.
All right, Sam Gordon. Well, Merry Christmas, mate. I think it's the first Merry Christmas I've given anyone so far. It's December, so
Merry Christmas to
we are in
yourself as well,
Advent, so it's all good, mate. Keep up the good work. Australian School of Property, Australian Property Scout.
And School of Property.
School of Property. Yeah.
That's it, mate. That's it. And the old Scouting Australia podcast, if anyone else wants to go tune into that.
Yeah. So I do dial into it every now and then. And
what do you think?
Listen to you guys. Yeah, it's good.
Thanks, mate.
Yeah, it's good. It's quite technical, a lot of stuff you talk about, which I think for a lot of people who know what they're doing, it's probably pretty valuable for them.
Yeah.
So, yeah.
100%.
Anyway, thanks for coming in, mate. Thanks for tuning in, everyone. smartpropertyinvestment.com.au. You can find us on social media, and we'll see you a few more times before the Christie break on the Smart Property Investment Show. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.